Hello, beautiful people. Welcome back to Invested. Interesting question I'm going to take. It's about unpriced real estate valuation. So the question goes, brokers, why do you market a property as unpriced? Why do I see property marketed but not priced? Make no sense to me. Is that part of your job as a broker? How many people actually call you when you don't have a price? How do you even have a land the listing by telling your client you don't even know what it's worth? Why not just take it to auction? Good question. Is like this person kind of venting and is probably frustrated. So let me kind of go into why some property might be unpriced. And, a lot of the investors here or investment personnel may have seen property. It goes best offer or unpriced and they have a best offer. Or, some cases will have a pricing guideline. So there's two strategies why they do that. Number one, when it's price, there's a price guidance, you're actually kind of getting few groups to get to that asking price or even higher. So for instance, if the price you're going out to market, it's an 8 cap pro forma, and let's say it's $4 million. And of course, you're going to, when someone signs an NDA or they want to take a look at those data, you'll send out something called the war room or database room, right? So they'll look at the P&Ls, the rent rolls and all that. And the individual prospect investors will vet and see if they can get to $4 million. And because sometimes some of the costs, operating expenses are unique to that owner. So a new person coming in may have a higher property taxes assessments. They might have a higher insurance cost, which everyone kind of sees right now. Insurance has got to skyrocket. Also, they need to factor in leakage. So those are all the things that they have to do due diligence, and they come with the price and say, hey, we can do 30-day DD, 30-day close, but our best and final offer is $3.8 million. Things like that. That's how they negotiate. And that's where typical traditional marketed capital markets brokers would do that. But sometimes going unpriced is more strategic. We don't advise do that on every single asset. But what that does is if the property is in a very good location or you're in a shoulder season, right? Interest rates are coming down or interest is going up. So you don't know what the best price you can get. So what you do is you unprice the asset, you go out to market and have people who have interest in that property reach out to the broker. Then at that point, they can sign an NDA or confidentiality agreement, and you provide the same material, rent rolls, P&Ls, historicals, all the good stuff that goes with traditional divestment. And from that point, the prospect buyer is going to be underwriting the deal. Maybe you don't say 8 cap, right? That's what you're looking for. But what if another group base it on 7.5 cap as interest rate has moved down? So then you can get more than $4 million. So you don't want to negotiate with yourself and you want to go out that way. So that's why sometimes it's unpriced. Also, another reason why they're unpriced is maybe the building is vacant. It doesn't have an NOI, right? Because usually commercial real estate, you are going to be trading that asset based on current income or future pro forma income. But if you're vacant, completely vacant, it's really hard. So there's no really cap rate. So then you don't want to put a guidance on that. You want the other personnel to come in because, and I'll tell you a reason why. If it's a traditional investor and they're looking at this retail asset and you're like, oh, it's a retail, we can probably get $17 triple net. It's going to cost XYZ. Then we can give you, $2.1 million, right? Traditionally. But what if that location is in a main on main and a redeveloper or development company comes in and doesn't want to use it for retail? They want to scrape it and build a multifamily. So now they're going to underwrite that deal completely different because it's not retail. They're underwriting it as from a land value to do redevelopment. So sometimes that's called cover land plays, land bank play, whatever it may be. But then, because it's on a very good location and they want that land, they may be able to go 10-story with the variance from the city. The city really wants alternative use outside of retail, such as multifamily for housing. So now they're going to get favorable treatment from the city. So now, if he did it and it can go up 5 stories, now to them, that land is worth $4.2 million. So they might come back to you at, $3.7 million and say, we'll buy it from that. So those are the reasons why, some of the assets might be unpriced. some savvy investors with savvy capital markets group, what they will do is run optionality scenarios. If we sold it as is, how much would it be? Now, if we entitled it and get zoning for a different use, how much can we get? So we can get, hey, we already got the entitlement. We're not going to develop it, but we got the entitlement to go FAR, which is floor area ratio, 5 stories. Now you can do a mixed use project. So that now is worth from a, floor per area, essentially it's like $6. Yeah. So then you can go 5-story high. So now it's worth 6.2 million. Like those are all different ways for, seller to really kind of strategize to maximize their revenue or maximize their actually investment. So those are the reasons why. So unless you're really a dumb broker, you don't know anything. But if you're selling commercial real estate and it's a decent size, there's a particular reason why they'll do that. And sometimes when you call them, you might be frustrated here. It's like, you don't even know how much it's worth. They exactly know how much it's worth, but they want you to negotiate. And if you give them a lowball offer, they'll just ignore you. So you can tell, who's savvy, who's not. And if you're going to lowball, they know you're not qualified either, so they want to talk to you anyway. So those are the reasons why, if you're going to be an investor, to fully understand what you're buying and know how to underwrite certain aspects of the real estate deal. If you found this content helpful, please like, subscribe, and follow us. Thank you very much.